Hey everyone, my name is Sherman, a CPA here at Life Accounting, where we help you save on taxes and increase your wealth. Today I want to help you do this by going over the new income tax brackets for 2022. The IRS recently increased the income limits for each tax bracket to account for inflation. Now, it is important that you understand these tax brackets because it may impact your tax plan for the upcoming year and how you plan to approach your tax strategy to maximize your savings. So stay until the end for a thorough explanation on how tax brackets work and the new income limits for 2022. And by the way, do me a favor by liking this video so more people can find it. All right, so the IRS just adjusted the 2022 tax brackets for inflation. And in short, all of the tax rates have remained the same, but the income limits inside of each tax bracket have been increased to account for inflation. Now, I have went ahead and created this simple spreadsheet to model the major differences here. Let's go ahead and start with single taxpayers. Here are the tax brackets for single taxpayers. As you can see, each income limit has increased by a little over 3% per tax rate. But let's walk through this to make sure you fully understand how this works. So let's say you plan to make $100,000 in income in 2022. Well, in this case, you will be taxed 10% on about the first $10,000 in income you earn. Then you will be taxed 12% on the next $30,000 in income. And after that, the tax rate jumps to 22% on the income you earn from roughly $42,000 to $89,000 in income. And then finally, you will be taxed 24% on the remaining $11,000 in income that has not been taxed yet. And of course, if you earn over $100,000 in income, you would continue to use these tax brackets to calculate the amount of federal income tax that you owe. So if we took all the income taxes that person would owe on $100,000 in income, then the effective tax rate would be around 18% or $18,000. Now, this is important because a lot of people misunderstand how tax brackets work. They think because their income is in the 24% tax bracket, then that means that 24% of their income will be subject to taxes. But no, not exactly. That would be the case under a flat tax rate system. But for individuals, taxes are assessed on an incremental basis, as you saw in the example. So if someone earned $40,000 per year in income, you would be taxed the same as they would on your first $40,000 in income as well. But the next batch of income you receive will be taxed at a higher rate, hypothetically. So when you are tax planning, always plan for your effective tax rate, not your incremental tax rate. With that said, let's go ahead and look at the tax rates for married individuals, and then we will talk about the standard deduction increases. All right, so here is an overview of the tax rates for taxpayers who file jointly with their spouse. Now, as you can see, the income limits for married taxpayers are twice as much as single taxpayers to account for two or more incomes. But even if your spouse does not have any income, you can still benefit from these tax brackets. The rate of increases here are exactly the same as single taxpayers, with it hovering right around 3% for most tax brackets. So let's say you and your spouse earned $120,000 in income together. Well, in that case, you would pay 10% on the first $20,000 in income, then you would pay 12% on the next $63,000 in income, and then you'd pay about 22% on the remaining $40,000 in income. Therefore, the amount of federal taxes you would owe on $120,000 in income would be about $18,000 with an effective tax rate of 18%. Now notice that this is the same effective tax rate that we saw with the single taxpayer who earned $100,000 in income. But because we filed jointly with a spouse in this scenario, we were able to take advantage of those higher income limits to pay less taxes on a higher amount of income. In the last example, we never reached the 24% tax bracket, which we did with the $100,000 in income in the single example. Now, to be fair, there are scenarios where it makes more sense to file jointly with a spouse or file separately from your spouse, depending on your unique income circumstances. This is why it is important that you get connected to some good accountants or just subscribe to our channel. Anyway, the last thing that I wanted to cover here were the changes in the standard deduction. Now, as you know, the standard deduction lowers your taxable income. So if you earned $100,000 per year in income and you have a $12,000 standard deduction, then you would only report $88,000 in income, dropping you into the 22% tax bracket instead of the 24% tax bracket if you are filing single. With that said, let's go over the new rates. So in 2022, the standard deduction amounts will increase to $12,950 for single taxpayers or married taxpayers who file separately, $25,900 for married taxpayers who file jointly, and then $19,400 for taxpayers who file as head of their household. So use these standard deductions to your benefit, and also keep in mind that you can alternatively take itemized deductions, which allows you to deduct specific things like your mortgage interest, your property taxes, medical expenses, charitable contributions, and more. And if you want to learn more about itemized deductions or more ways to lower your tax bracket, then be sure to subscribe to our channel, because we already have content about how to do this on our channel. Thank you for watching, and I will talk to you soon.